Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott. We got a fun live, as always, show for you here today on VCTV. We've got a couple great friends of the VCTV family and outstanding investors who are looking at so many different industries joining me in just a moment to talk about everything that's happening in manufacturing and surrounding areas. We'll bring in some of those technologies that are helping to power the future of manufacturing, supply chain, and logistics as well. So stay tuned. And if you haven't already, make sure you like and subscribe to today's channel and episode as well to hear more on VCTV. Check us out on LATOKEN.com. Big thank you to the LATOKEN team and to Maria for making today's episode possible. With that, I'm your host, Kyle Ellicott. Let's go ahead and introduce today's outstanding co-host. Keith, welcome back to the show. A little intro, a little background.
Hey, great, Kyle. It's always good to be back. More than 20 years in venture and private equity, originally on the corporate side with Mitsubishi and BASF, and then 10 years as partner of my own venture fund. And in the last year, I've formed a new group called Upper Stage Capital, and we are playing in what's called the lower middle market of private equity, really a kind of no man's land between mainstream private equity and venture capital. We are acquiring profitable companies, but with less than 25 million in revenue, so well before private equity gets involved. Obviously, from my corporate background, you could assume that I've done a lot of stuff in manufacturing, and indeed that's the case, and that continues to be an area of interest for us within Upper Stage.
Thank you, Keith. The only question I have for you real quick before Jean Paul goes, when are we going to see this stealthy website no longer be stealthy?
I'm gonna let you I hope very soon.
All right. I won't tease you too much today, but nonetheless, Jean Paulo, welcome back to the show. A little intro, a little background.
Thank you, Kyle. Hi, Keith. Welcome, everyone. Thank you for having me here. Gianpaolo Barigi, 30 years in investment banking, VC, and private equity. At present, preparing the technology amalgamator in the European Union open to manufacturing technology companies from all over the world. Back to you, Kyle.
Wonderful. Gentlemen, you both have a ton of experience in this area and surrounding, again, manufacturing, supply chain, logistics. We'll call it the whole value chain. We know today's topic also brings a little bit of blockchain into that paradigm. We also know that things like the Internet of Things, future of connectivity with 5G and edge also play a role into this. We know automation from the AI side, all of these surrounding technologies we talk a lot about here on VCTV all play a role in the future of manufacturing. But that being said, we went through a wild digitization of value chains and manufacturing as a whole over the last really 5 years, but more aggressively in the last 18 months. Would love to hear your view as we're kind of turning that second half of the year here in 2021. How does manufacturing look different to you as investors and maybe some of the companies that you're seeing? Keith, let's start it with you.
Yeah, I think the breakdown of supply chains under COVID has hastened the adoption of many different types of innovations. Has streamlined a lot of things where we were dependent on single source, sometimes invisibly unknown. This has blockchain is one of the technologies that it has allowed for greater transparency throughout the supply chain to know where your products are being manufactured and where the inputs that go into those products are being manufactured, and identify bottlenecks where multiple suppliers are being actually supplied by the same person earlier in the value chain. So technologies like blockchain are, and blockchain's not the only technology here. There's actually many competing technologies in this space, but these type of technologies have allowed for that kind of provenance, and the breakdowns last year really hastened this. So that's the 18-month time frame you talk about. I would say that's one of the big changes that's occurred in that time frame.
Jean Paulo, anything to add or your view as well around this?
Well, I mean, COVID has disrupted global supply chains all over. I would say, paradoxically enough, and depending on the industry sector, we even seen, some vertical silos in the United States affected more than in other parts of the world. But again, the market has been hit. And this is coming at the moment in which the manufacturing industry is at I would say, an inflection point of going, digitalized for as much of its content as possible. So I think for the industrialists out there, there's a double challenge, what we did, disruption, which in some sectors is estimated to persist, the ripples in the sector for as long as 4 years. Others are, reabsorbing the hiccups much quicker. And then again, we have a world that also in terms of global physical distribution of goods and logistics has a lot of bottlenecks, as the Ever Given incident in the Suez Canal has, demonstrated, by the way the tanker is still there. And, the owner are wiggling with the Suez Canal Authority and the Egyptian government trying to, settle, just to get the tanker out of the mooring where it is being harbored. That alone is piling up, billions and billions of dollars in delays and possible that are turning into actual litigation costs for hundreds, if not thousands of manufacturers, suppliers, distributor, and insurers and reinsurers. So, we are we're living in a complex world, we know it. But I think that, there's more than one silver lining. The global economies are really ready to start again, particularly manufacturing is being eager to rev engines again. In Europe, we've seen during the last summer, that was I would say the only period in which countries were not in lockdown, that the industrial production has surged in some countries, even up to 10, 16% on a month-to-month basis. And so I think overall, the structure, the platforms of the manufacturing sectors are there. Of course, there is the supply chain hiccups because, productions have been halted, stopped or delayed in many countries in different moments since the pandemic hit. And we are still in the, probably in the tail of it, but since some countries like India are well into it, I see, as I say, anyway, silver lining, because as I say, there's a number of very promising countries that are, outside of the usual suspects of the United States and North America and the European Union. I would say very well in Asia, for example, Vietnam and Malaysia as being ready to, surge in the manufacturing. In Europe, the border with Asia, I would say Azerbaijan, definitely probably my best bet for the non-EU part of Europe, and also assisted by, I would say, very stable regime and the rise in oil prices. Azerbaijan is an oil and gas producer, and obviously is benefiting also from the surge in oil prices of the recent weeks. And in South America, we have Chile, also that is a very good player. But we have to put everything into the context of rising interest rates and the quantitative easing. It's heading. A substantial insult to the injury, because, as I've said in the past, many countries will see a debasement of their currency in the order of between 40 and 50%, in some countries also 80 to 90% on a year-on-year basis, which, leaves a lot of questions unanswered, as to how we can tackle this big issue. If you think that in the United States and in Europe, just the printing of 20% more monetary mass on any given year, like both Federal Reserves and the European Union and the European Central Bank have announced for this year and for the oncoming years, is provoking in the economy, at least 90 to 95% of the businesses to be susceptible of going belly up. You could see that these effects can be only amplified in tier 2 and tier 3 countries that are, seeing their currencies that are not the euro and neither the dollar being debased at a rate of over 40 to 50% and 80 to 90% on a yearly basis for the next 2 to 3 years. So, what type of world are we designing? It's the question that I think manufacturing has to ask itself. Politicians have to ask it. Leaders, industry leaders have to lobby and get answers from the politicians and from the central bankers, because, everybody else is, including the financial industry, is at the wind of trying to understand where we could possibly deploy risk capital, call it venture capital, private equity, whatever you want to call it, on companies whose free cash flow cannot be more than 25% per year. It's very difficult to find this type of targets, or it's very difficult to find targets that would beat this index without incurring in huge risks. But I think, that I've opened up enough cans of worms, with just one single comment. So I'd be also happy to hear Keith and you, Kyle, and maybe if there's anyone in the audience with questions, be more than happy to answer.
Keith, thank you. Jean-Paul, Keith, anything to add?
No, Paul, you touched on a lot of different things there, any one of which could be a big discussion. But the devaluation of currency and inflation is definitely a concern here. When I am looking at buying companies, leverage is part of that. And at the moment, lenders are very willing to offer very, very good terms. But as we face inflation coming from different angles within the supply chain, going into these manufacturing businesses, there is a risk there that we will take margin hits, EBITDA hits, that we, depending on the market we sell into, we may not be able to pass that along to customers. The variability of inflation in the different areas is a strong concern for me. I mean, here in Canada, we've seen a strong surge in the Canadian dollar, which is largely driven by the increase in oil prices. The U.S. dollar is doing well against most currencies, but not so well against the Canadian dollar, which definitely affects us here as we import and export. Each country is the other one's number one trading partner. So this is something that I'm watching with a high level of interest.
Well, and real quick, Keith, taking a step back for a second, on your initial comment, you mentioned that there's other technologies aside from blockchain that are playing a role in the manufacturing process and its upgrade over the last 18 months. Can you take us a level deeper on some of those industries and, technologies that you are paying close attention to, and maybe share a few more examples of investments that you're looking at or opportunities that people can be paying attention to?
Oh, sure. Yeah, absolutely. I've talked on this show before about the proliferation of sensor technology and the ability we now have to, or let's say emerging ability, because we're still only scratching the surface, but the ability to not only gather the data, but also process it and derive meaningful conclusions, which we can then improve our processes with. That does fit into a supply chain, absolutely. We're not just talking about visual scanning of barcodes, QR codes, etc. We've seen NFC and other technologies continuing to make a difference there in terms of traceability. I have an investment in a US company called TrueTag that have nanoporous microparticles that are made out of silica, so they're actually edible. You can put them into label or into packaging, but you can put them into actual product, even if it is, say, a pill in the pharmaceutical industry. It can be on the coating, and those particles can be visually scanned using either a very sophisticated scanner or even just using your smartphone. The camera on the smartphone obviously is designed to take pretty pictures, and it doesn't maybe have the full spectrum that the more sophisticated device does, but it does give you enough to know that this product is authentic, that it came from a particular batch, that, you know, and then that can be looked up in the database as to how it came through its supply chain and logistics, if it's expired, if it's a recalled batch, and most significantly in that particular industry and in other high value industries, whether it's legitimate or if it's counterfeit. So I'm very excited about technologies like that that are very easy to implement, that get away from a separation of product and packaging, and make logistics easier at every step of the supply chain. I have one other investment that maybe falls into that category, and that's Hazel out of Chicago. They are specifically focused on food, on preventing the decay, or let's say greatly slowing down the decay of produce and other things such as meats, etc. And they also have an edible product, generally recognized as safe, that is very simple to implement into any kind of supply chain for food. Simply speaking, in the produce application, it's just a little package like a packet of sugar or salt or silica gel, whatever. That kind of thing just gets dropped one into each box of mangoes or avocados, whatever it is that you have. And that will absorb the gases that trigger senescence or decay in these fruits and vegetables. Very, very simple to implement, very low cost. And should one of these packets rip and the dust get all over your apples or whatever it is, it doesn't matter. This stuff is non-poisonous. It's edible. So I'm excited about that, about companies that think through ease of implementation in the value chain, that allow things to be, in the one case, more traceable, in the other case, to ease the bottlenecks of decay and limited lifespan, which allows for much more flexibility and much less waste within the supply chain.
Thank you very much, Keith. Jean-Paulo, anything to add on to Keith, but also would love to hear your thoughts. I mean, going deeper on the technology side as well. Any other additional technologies or what you're maybe seeing in the blockchain space as well?
Sorry, I didn't want to interrupt you. No, absolutely. I think that there's some examples that manufacturers have to take a look at in the blockchain space, and then particularly Bitcoin. I mean, if you see what just happened, very recently with the North American Bitcoin Mining Council, where Michael Saylor, Elon Musk, and the miners met to try and define what are the standards for a uniform modeling of energy consumption in the mining of the Bitcoin, so that we could also communicate to the global audiences what's actually going on in the industry in terms of energy consumption, in terms of carbon footprint. And I think that those are examples that other sectors of the, I would say bricks and mortars and technology manufacturing should inspire themselves on for their own sectors to do things better, because there is a need of keeping each sectors ahead and abreast of what's going on in the world. And to just perform well is not good enough as it used to be in the past for any manufacturing company. So I think, to try and aggregate, to try and mobilize consensus, to try and lobby, and not to live as individualistic companies as, the competition that we had in the 20th century. I think we have to now converge towards a world where we have more of a sharing economy and less of a competitive economy. That doesn't mean that there will not be the survival of the fittest, but we will do it the evolution will be led by a sustainable model, and a model that can be immediately communicated to the media and to the audiences that have the interest in that particular arena or realm, like it happened for the Bitcoin, and issues were there. Issues have been tackled with not entirely streamlined out of a single meeting, but the consensus is forming for this to happen in a very short term, so that moving onwards, that industry that I think it can remain as a benchmark for other, more traditional manufacturing sectors. That industry can have, as I say, a very clear positioning in the market in terms of a lot of parameters that nowadays we all consider as fundamental, both as operators in the business, as financiers, and as stakeholders, in the environment cause at large. But again, this is just an example. I wanted to share it because I think it really should serve as a lesson for many of those entrepreneurs who are in other sectors. How can things can get done better, and there's always more than one way of facing an issue and solving it.
Absolutely. And with that, gentlemen, I want to come around for closing thoughts and opportunities in this area. And you've mentioned a few in your notes and your comments today, pardon me. But if you had to throw out one big area of opportunity, what would it be for investors and entrepreneurs? And then any closing thoughts you have, and of course, where can everyone find you online to continue the conversation? Keith, or Gianpaolo, let's start with you. Keith has been going first this whole time, so we're going to start with you.
Oh, yeah, well, definitely. I mean, Kyle, I am, with my partners, nearly completed the development of the technology amalgamator. And this is a different way of doing things because it's not an incubator, it's not an accelerator. We are actually rolling up companies that by themselves may not be unicorns or tier one, but by being merged with companies that have complexities and potential as theirs, with different weaknesses and strengths, we can equalize the proposition, make the companies more palatable for the investment world, and also scale their businesses, much more efficiently. And last but not least, I would say also by increasing, the investment size, we make the companies more palatable for the larger investors, because business angels are showing a little bit, the limit of their actions in situation of stress like the COVID has been over the last 2 years. So I think, most of these companies were still going to business angels. Business angels sometimes in moments of turbulence, of storms, are busy protecting their own investments and their own net worth. And other investors would not kick in because, the investments are too small. So by increasing the size of each individual group that we roll up and bring to the market, we do intend to diversify, reduce the mortality risk that these companies face, and at the same moment increase the likelihood that quasi-institutional investors get more interest and participate in these ventures. And thank you very much.
Thank you very much as well, Gianpaolo. Keith.
Oh, I'm excited about the same type of opportunities that Gianpaolo described. There are so many really compelling, profitable businesses that aren't scaling, and perhaps not because they couldn't scale, but because their founders are satisfied with a lifestyle business. But where they have compelling products, manufacturing techniques, services, those kind of companies really excite me. Those are the kind of companies that we are acquiring, and the return numbers around those type of plays are very, very high. I mentioned leverage earlier. The banks love these kind of manufacturing businesses with good, steady margins, and then you marry that up with a group such as Parigi or my own, and the vision, ambition, and resources to go after the larger market. That's very compelling. So we're able to access very low interest, very good terms, which then means it doesn't take a whole lot of capital to acquire multiples of these companies, roll them up together, and non-organically scale these businesses to something which is very interesting for later stage private equity, perhaps for strategic investors, or if you get steady returns and high EBITDA percentages, you could even support a public listing for a company like that. So I think there's a lot of opportunity there, and it's greatly underserved. And manufacturing is one of those areas where there's a ton of opportunity.
Absolutely. I see shaking heads still around the table. So thank you both very much. And to our audience, thank you so much for tuning in as well. If you like what you heard, make sure you click subscribe, like, and share today's episode. Check out the archive on LATOKEN.com to hear from today's speakers and all speakers of the VCTV family. Keith and Gianpaolo and myself would all love to hear from you. So please do reach out, add context where you heard us, where you met us, and what you would like to continue the conversation about. With that, I'm your host, Kyle Ellicott. Everyone have a wonderful day, and a big thank you to the LATOKEN team and to Maria for making today's episode possible. We'll be back here tomorrow with more VCTV. Take care, everyone. Bye.
Cheers.